In today's video, we'll talk about something that's missing from most expat lives and yet it holds the key to everything: financial literacy. Let me start with a simple question. Why do so many expats in Gulf earn well yet go home with little or no savings after spending years in the GCC? I've met engineers, doctors, bankers earning tax-free salaries for 10, 15 years, but when their job ends, they pack up and return home sometimes with debt, no home, no investments, no plan. Why does this happen? Because no one ever taught them this one skill: financial literacy. In this video, I'll break it down for you in simple terms: what it means, why it matters more than ever in 2025, and how you as an expat in GCC can start your financial literacy journey today. Let's dive in. What is financial literacy? Financial literacy means knowing how to manage your money in real life. Not just how to earn it, but how to save it, protect it, grow it, and spend it wisely. Think of your income as a car. Now ask yourself, can you drive it without driving skill? Financial literacy is that driving skill for your money. Without it, you'll either crash or keep going in circles. And just like driving, there are 5 key controls you must learn. Let's walk through them one by one. Income. Understand what your really income is. Most expats don't actually know how much they take home after deductions. I have an Indian expat friend in Dubai earning good salary on papers, but after paying rent, school fees, groceries, eating out, money sent home, he was saving just few hundred dirhams. Financial literacy starts with clarity. How much do you actually earn? Where is your every dirham, dinar or rial going? Can you optimize your income? Ask yourself, is your income stable? Can you add other sources like freelance work or passive income? Quick tip. Use simple tool like Excel or free app available to track your income versus your expenses every month. Results will be eye-opening for you. Budgeting. Control how you spend. Budgeting is not about living miserably. It's about taking control of your money. One of my coaching clients in Qatar was constantly in overdraft. When we reviewed his spending, he discovered that he spent 5,000 riyal a month on weekend outings and online shopping. With small changes like eating out less, cutting down impulsive shopping, he started saving good amount of money per month. Quick tip for you. Try 50-30-20 budgeting rule. Allocate 50% of your income for needs, 30% for wants, and 20% for savings and investments. Budgeting gives you peace of mind, and peace of mind is priceless. Savings. Prepare for the unexpected. Here is the truth. As expat, we don't have safety net. If we lose our job, we don't get unemployment benefits. Visa gone, house gone, school gone, all in one blow. That's why emergency savings are non-negotiable. I know a Filipino salesman in Doha who lost his job during pandemic, but he had 4 months of salary saved. He survived, paid rent, and found a new job without any panic. Without that cushion, he would have been forced to leave the country in a rush. Savings are optional. They are your survival fund. A quick tip for you. Start by saving at least 10% of your income. Build up emergency fund to cover 3 to 6 months of your essential expenses. Investing. Make your money work for you. Saving is great, but it's not enough. The real wealth grows when your money starts making more money for you. Otherwise, inflation silently eats away your money's value. That's why investing is key. Now, investing sounds scary to many: stocks, real estate, gold. But I've seen people with average salaries created wealth simply by starting small, learning steadily, and being consistent. A Pakistani friend of mine in Saudi started investing 500 riyal per month into ETFs and sukuks. 10 years later, his portfolio grew over 300,000. No trading, no gambling, just steady and consistent investing. Quick tip. Start investing into mutual funds, ETFs, sukuk, or real estate investment platforms in your country or in the region, and avoid the quick get rich schemes and fake crypto offers. Protection. Secure your family's future. This is the most ignored but most important pillar. If something happens to you tomorrow, what happens to your family? I know it's hard to talk about it, but not planning is worse. I knew a Sri Lankan father in Riyadh who died unexpectedly. No life insurance, no savings, no emergency fund. His family had to depend on crowdfunding to go back home. Please don't let that be your story. A good life insurance plan and a proper health coverage is not a luxury, it's a responsibility. A quick tip for you: review your health and insurance policy. If your employer's coverage isn't enough, get yourself a good term life insurance for at least 10 to 15 years. Why it matters in 2025? Let's be honest. The cost of living in Gulf is rising. School fees are up, rent is climbing, AI and automation are shifting job markets. Retirement planning is now your responsibility. In 2025, you simply cannot afford to be financially blind. Financial literacy isn't optional, it's essential. You're already working hard, far from home, sacrificing for a better future. So let's make sure that future is financially secure for you and for your family. Financial literacy is not a course or certification, it's a mindset, a skill. You don't need to be a finance expert. You just need to be aware, intentional, and consistent. Take the first step today. Track your spending, start saving, review your insurance, open your first investment account. We'll try to understand why most expats in GCC struggle financially despite high incomes. Let's get real for a minute. You're earning well in the Gulf, tax-free. Yet you often feel like your money disappears. Why is that? The income illusion. See, most expats in Gulf fall into what I call income illusion. They earn high, spend high, and assume that's financial success. But it's not about what you earn. It's about what you keep, what you grow, and how you manage it. Real story: earning big, saving nothing. A friend in Qatar earned salary of 38,000 riyal, but every month he's dry. Why? Because his lifestyle kept growing with his income. Car upgrade, fancy dinners, annual vacations, no budget, no saving habits, no plan. That's not rare, that's the norm in GCC. Hidden reasons why expats struggle? In my last 17 years in the GCC, I've observed 5 common reasons why so many expats in the Gulf struggle financially. Lifestyle inflation, more money, more spending. Peer pressure, trying to keep up with friends and colleagues. No financial plan, just living month to month. Debt traps, easy credit cards, EMIs, and car loans. Lack of investing, saving left idle or misused. Let's go a little bit deeper to understand it. Lifestyle inflation. That's the silent killer. With every rise of salary, expenses also rise. You move to a bigger apartment, dine out more, buy the second car. Nothing wrong with the comfort, but not at the cost of your future. Learn to upgrade your savings first before you upgrade your lifestyle. Keeping up with the friends and colleagues. We've been all there. Friends want to split a villa in Bali, and you say yes even if your budget says no. In the GCC, we often confuse financial image with real financial health. Truth is, the smartest people are usually the quietest about their money. No financial plan, no progress. You wouldn't start a road trip without a destination, right? But most expats go years without a financial roadmap. A simple plan, monthly savings, emergency fund, and investment goals can change everything. Easy debt traps, living on credit. In GCC, banks often offer easy loans and cards. Before you know it, you are juggling EMIs and half of your salary is gone into repayments of your loans. Debts feel normal, but it silently eats your future. No investing, no growth. If your money isn't growing, it's shrinking. Savings in the bank aren't enough. Inflation eats your money's value and purchasing power, especially if you're planning for retirement or kids' future education. You don't need to become Warren Buffett, just learn basic investing, breaking the cycle, how to take back the control. Here's how to fix it. Track your monthly spendings, you'll be shocked where your money leaks. Save at least 20% of your income, treat it like a monthly bill. Learn to invest, even if it is an index fund. Start small and be consistent. Plan for the future, short term and long term. Stay humble and live smart. Final message, you deserve more than just a salary. Financial freedom isn't about luck, it's about choices. If you are living paycheck to paycheck in the Gulf, even on a high income, you are not alone. But you can break that cycle, and I'm here to help you. We are diving into something that's often talked about but rarely done right, setting smart financial goals. Especially if you're an expat living in the GCC, you know how fast time flies. Once you land with excitement, and before you know it, 10 years have gone by, and you are still wondering where all the time and money went. That's why today's topic is so important. Why setting smart goals? Let me ask you something. Have you ever wondered, having worked hard, earned well, but still felt like you are not moving forward financially? That's what happens when we don't have clear goals. We drift, we earn, we spend, and then we wonder why we are not building the wealth. Think of your financial journey like a GPS. If you don't set a destination, how will you ever reach it? The power of SMART goals. That's where SMART goals come in. SMART stands for specific, measurable, achievable, relevant, and time bound. Let's break these down with real examples, especially for us expats in the GCC. Specific. Don't just say, I want to save money. Say, I want to save 300,000 Riyal in the next 3 years to buy a house back home. Why? Because clarity brings focus. I've seen many expats say they are saving for the future, but they don't define what that future is. It could be a home, kids' education, retirement. If you don't define it, you won't prioritize it. Measurable. You must be able to track the progress. If your goal is 100,000 Riyal in 1 year and you save 8,000 a month, then you know exactly where you stand. When your goal is measurable, it keeps you motivated. Imagine you are running a marathon. Wouldn't it be easier if there were milestones on the track? Same goes with the money. Achievable. Be honest with yourself. If you earn 10,000 Riyal and say you'll save 9,000, you'll feel frustrated very quickly. Set goals that stretch you but don't stress you. Let's say you cut down on unnecessary expenses and save 20 to 30% of your income monthly. That's realistic and sustainable goal. Relevant. Make your goals match with your life priorities. If your dream is to start a small business back home, then your savings should align with that, not just buying things under peer pressure or to impress others. Too many expats get caught in lifestyle inflation, upgrading cars, gadgets, clothes, expensive holidays, but not building the assets. Ask yourself, is this goal helping me build the life I want? Time bound. Deadlines create urgency. Without a time frame, goals become wishes. So instead of saying I'll save for my child's college, you should say I want to save 300,000 Riyal in next 5 years for my son's higher education. This helps you plan better, track your progress, and stay accountable. A quick example. Let's say you are a 35-year expat in Dubai. You want to retire in next 15 years. Here's a SMART goal. I want to build a retirement corpus of 1 million dirham by the age of 50 by investing 5,000 dirhams monthly in a diversified portfolio of stocks and ETFs. That's specific, measurable, achievable, relevant, and time bound. Now compare it with someone saying, I want to retire early. Big difference, right? Common mistakes to avoid. Let me quickly touch on few mistakes expats often make. Setting goals based on what others are doing, not what you truly value. Not reviewing your goals regularly, not writing them down. Yes, as per research, just writing down your goals makes you 42% more likely to achieve them. My personal tip, here's something I personally do every January. I sit down with a notebook and set my financial goal for the year. I break them down by category: savings, investing, giving, and learning. And every month I review them. Just like a company tracks its profitability and financial health in income statement and balance sheet, similarly, you need to track your financial progress regularly. So to recap, don't let your years go by without a financial plan. Use the SMART framework to bring clarity and direction, and make sure your money is working for your goals, not just for your expenses. We are talking about something every expat should understand, but very few actually do: your salary package. Because what you think you are earning and what you are really getting can be two different things. Let's break it down in simple terms: basic pay versus total package. Most expats focus only on basic salary, the monthly figure that gets transferred to your bank account. But in the GCC, your total compensation can include much more. And if you don't understand all the pieces, you might be undervaluing what you are getting or missing out on negotiation table. So what's included in your total package? Let's break it down in two parts. Components of a salary package. Here are the most common components. Basic salary, your core monthly pay, that is usually what your gratuity end of service benefit is calculated on. Housing allowance, sometimes paid separately, sometimes included in your basic. Always check how it's structured. Transport allowance covers your fuel or commute costs. Medical insurance, your employer may cover your insurance, your spouse's and children's. That has real value. Education allowance, especially important if you have school going kids. Annual air ticket, many companies offer yearly return flights to your home country. Gratuity, your end of service benefit. The longer you stay, the more it adds up. Bonuses, performance or company based, not guaranteed but worth understanding. These benefits may not appear in your bank account every month, but they matter. When you calculate your real income, include these. Real life example. Let me share a quick example. A friend of mine in Riyadh was offered 18,000 a month. He thought it wasn't enough, but when we looked deeper, housing allowance 3,000, transport 1,000, annual air tickets for 4 people, almost 8,000, family medical insurance worth 15,000, end of service gratuity almost 10,000 a year. His real package was close to 27,000 riyal a month in value. That's huge difference from 18,000 he was initially focusing on. What to ask before accepting a job? Before signing any contract, ask HR these questions. Is the basic salary separated from allowances? What benefits are included? Are they monetary or in kind? What's the gratuity policy? Is housing provided or do I need to find one? Are medical insurance and air ticket for the whole family or just me? Are these performance bonuses or relocation benefits included? You would be surprised how many expats leave money on the table just because they didn't ask for these benefits. Why this matters for financial planning? Understanding your full salary package helps you make better financial decisions. You'll budget more accurately. You'll know your actual saving potential. You can plan long-term goals like education, real estate, retirement with more clarity. For example, if your company covers your child's school fees, you can divert that money towards investing or building your emergency fund. If your ticket is paid yearly, save that money in your vacation jar. When you see the full picture, your money strategy becomes more sharper. Wrap up. So remember, your salary is more than just a number. Don't just look at your bank transfer, look at your total value. As expat, we often don't get the pension or social safety net. So it is on us to make smart, informed choices. And it all starts by understanding what we are actually earning. Today, we are diving into a topic most expats in the GCC rarely talk about: the hidden costs of living here. Your salary might be good on papers, but if you don't know where your money is going, you will end up saving far less than what you actually should. Lifestyle illusion. One of the biggest traps is what I call the lifestyle illusion. When expats arrive in Dubai, Doha, Riyadh, or anywhere in the GCC, it's easy to fall into the comfort zone. Tax-free income, great malls, branded stores, fine dining, it's all tempting. But here's the catch: most people start upgrading their lifestyle too quickly. A friend of mine from Pakistan landed a good job in Qatar. Within 3 months, he leased a luxury car, moved into a high end apartment, and subscribed to everything premium. He was earning well, but by the end of the month, he had nothing left to save. Remember, your income can be temporary, but your spending habits can become permanent. Now, let's talk about the actual hidden costs, the unseen expenses. First, housing. Rent is your biggest monthly expense. In some areas, it can eat up to 30 or 40% of your income. Second, schooling. If you have school going kids, international school fees can be a big shock. Fees range from 25,000 to 60,000 riyal per year in Qatar. Third, healthcare. Even with employer coverage, you may have co-payments, uncovered treatments, or need private consultations. Fourth, travel. Most expats visit home once or twice a year. Flights, gifts, leave spendings adds up quickly. Fifth, gratuity misconception. Many expats think their end of service gratuity will cover everything. Truth is, it's often not enough to fund retirement or big goals. Emotional spending. Here's another hidden cost: emotional spendings. We miss home, so we compensate with dinners out, buying new gadgets, or spoiling our kids. It gives short term happiness but long term regret. Think about it. How often have you said, I deserve this, I work so hard? This mindset is common, but it quietly drains your wealth. Comparison trap. Then there's the comparison trap. Seeing colleagues or neighbors with fancy watches or friends upgrading to bigger homes. Many expats don't talk about their debt or credit card dues. You see the lifestyle, not the liabilities. Financial freedom doesn't come from spending more, it comes from spending wisely. So, what can you do? Track your spendings monthly, use a simple Google Sheet or free available apps. Set a realistic budget for housing, travel, and groceries. Always plan for annual costs like schooling or vacations. Build an emergency fund, at least 3 to 6 months of expenses. Don't depend on gratuity. Start saving 20% of income and invest for long term goals. Living in the GCC gives you a golden opportunity to build wealth, but only if you are aware of these hidden costs and plan smartly. Today's topic is one that can quietly protect your entire financial journey: your emergency fund. As an expat living in the GCC, whether in Qatar, UAE, Saudi Arabia, or anywhere else, you already know that life here can be full of surprises. Some are exciting, others not so much. That's where your emergency fund becomes your silent financial bodyguard. Let's break it down together: what it is, why you need it, how much is enough, and most importantly, how to build one without any stress. What exactly is an emergency fund? Let's keep it simple. An emergency fund is money set aside just for emergencies. This is not your regular savings, not your vacation fund, and definitely not your shopping money. It's for real, unavoidable, unexpected situations like job loss, medical emergencies, visa problems, sudden family issues back home, or car repairs or urgent travel. Imagine this, your company shuts down unexpectedly. You are told your services are no longer needed. Rent is due next week. Your family is relying on you. You are not prepared. That panic, that pressure, and that stress, you don't want to be in that place. This fund is your safety net, your financial shock absorber. Why expats in GCC must prioritize this? In the GCC, most of us here are on work visa. There's no unemployment benefit, no long-term residency backup. Your visa is tied to your job. Lose the job, and in some countries, you might even have 30 days to leave the country. It's not just about the salary, it's about the chain reaction. No salary, can't pay rent, kids' school fees, pressure to send money back home, emergency flight costs. One of my expat colleagues in Dubai was in a senior position when pandemic hit in 2020. His company downsized. No emergency fund. He had to sell his wife's gold, pull his kids out of the school, and return home abruptly. It's not just about money, it's about dignity, choices, and peace of mind. Your emergency fund protects not just your finances, but your confidence. How much should you have in your emergency fund? Let's talk numbers. The general rule is 3 to 6 months of essential living expenses. Let's say you are spending 10,000 riyal or dirham a month on rent, groceries, utilities, kids' school fees, insurance, and transport. You should aim for at least 30 to 60,000 in your emergency fund. Now this varies. If you are a single, maybe 3 months is okay. If you are married with kids, go for 6 months. If you are the only earning member of your family, maybe 8 to 10 months is wiser. It may sound like a big number, but think of it like this. It's not an expense, it's your self-insurance, and it gives you something most people lack in crisis: choices and options. Where should you keep it? Here's the key. Your emergency fund must be safe, liquid, means easy to access, separate from daily money. Don't invest this money in the stock market or crypto. These are long term and carry risk. Don't keep it in your salary account. You'll end up dipping into it. Instead, open a separate saving account in your local bank depending on where you are. You could also use an online saving app if your country allows. Some banks offer money market return with better rates and quick access. Keep it in cash or near cash, not in fixed deposits where your money gets locked. Your emergency fund is like a fire extinguisher. You need it immediately, not after 90 days lock-in. How to build your emergency fund? Most people get stuck here. They say, I can't save this much money. Relax, you don't need to do it overnight. Here's how you can build it. Slowly and steadily. Know your targets. Let's say your goal is 48,000 riyal or dirham in 1 year. Break it down. That's 4,000 a month or around 133 riyal per day. Start with what you can. Even 1,000 a month is a good start. Automate it. Set up an auto transfer right after payday. Reduce 1 or 2 luxuries. Skip that extra dine out or online shopping. Use windfalls. Use part of your bonus to top up your emergency fund. Let me share my own story. I started my emergency fund while working in Riyadh. I was saving just 1,000 a month. After a year, I had a decent buffer. When I later switched the job and had to relocate to Qatar, I didn't borrow. That fund gave me breathing room. You don't build it in a day, you build it with discipline. Real life stories from expat. Let me give you two real examples. Hamid from Pakistan working in Muscat. He lost his job after working 8 years in a company. But because he had 6 months worth of savings, he stayed in Oman, hunted for jobs with peace of mind, and found a better one within 3 months. No panic, no rush. Alvin from Philippines, a salesman in Doha, he faced a sudden family emergency back home. Because he had an emergency fund, he flew home, helped his family, and came back without touching his credit card or taking a loan. That's what an emergency fund does. It doesn't eliminate the crisis, but it makes it manageable. Final thoughts and your action plan. So here's your action plan for this week. Open a separate saving account. Write down your monthly essential expenses. Set your 3 to 6 months target. Commit a monthly amount. Automate it and forget about it. Treat your emergency fund like your passport. Essential, secure, and always ready. Remember, being an expat gives you opportunity, but it also brings uncertainty. An emergency fund gives you the confidence to face both. Today's topic is one that almost every expat deals with: credit cards. Convenient? Yes. Dangerous? Also, yes, if not used smartly. Let's uncover the real truth behind credit cards, how they work, how they hurt, and how you can use them wisely without falling into the debt trap. What is credit card? Let's start simple. A credit card is not free money. It's a short-term loan from the bank. Every time you swipe your card, you are borrowing from the bank, and if you don't repay on time, the bank charges you hefty interest, usually 35 to 40% annually in the GCC. That's more than any personal loan or car finance. So while a credit card gives you flexibility, it's also a financial responsibility. A real life example: one of my coaching clients in Dubai used his credit card for daily groceries, dinners, even a weekend trip. Within 4 months, he was 14,000 dirham in debt, paying only the minimum amounts monthly. He thought he was managing until the interest snowballed. That's the trap. Easy to fall into, hard to escape. Pros of using credit cards. Now, I'm not here to scare you off. Credit cards can be useful tools if used the right way. Here's how. Cashback and rewards, for example. Many cards in the UAE, Qatar, GCC offer 1 to 5% cashback, loyalty reward points, airline miles, or discounts. Building credit card history. Timely repayments also help you build a good credit score, useful if you are applying for mortgage or a loan. Emergency use. If used responsibly, it can help cover sudden expenses. For example, medical bill when your salary is delayed. Travel benefits, free lounge access, travel insurance, hotel upgrades. These can be valuable for frequent travelers, but all these benefits only work if you clear your bill in the full each month. The debt trap. Let's now talk about the flip side. See, in the GCC, minimum payments on credit cards are often just 5% of the balance. So if you owe 10,000, your minimum due might be 500 dirham or real. Sounds manageable, right? But here's the catch. The rest keeps accumulating interest, which is added to the outstanding balance every month. And before you know it, you are stuck paying only the interest every month without reducing the actual debt. A Pakistani expat in Doha once shared that he's been using his credit card for over a year, always paying the minimum. When we looked at his card statements, he spent around 12,000 riyal, but had already paid 5,000 in interest and still owed nearly the same amount. This is the silent debt trap that many experts fall into. Smart strategies to use credit cards. Now let's talk about solutions. Here's how you can use your credit card smartly and safely. Always pay the full amount. Don't fall for the minimum payment traps. Use autopay. Set a automatic fund transfer from your salary account before the due date. Don't use it for wants. Stick to the needs, fuel, groceries, bills, and only if you have the cash to repay. Limit your cards. 1 or 2 cards are enough. Multiple card means multiple headache. Check your statements monthly. Don't ignore your spending. Look at where your money is going. Remember, your credit card should work for you, not control you. What if you are already in credit card debt? If you're already stuck in credit card debt, here's what to do. Stop using the card. Cut it if you have to. Don't add more debt. Create a repayment plan. Prioritize full monthly repayments if possible, and even if you have to cut back elsewhere. Consider a personal loan. A lower interest loan can help you consolidate and pay off high interest credit card debt. Negotiate with the bank, ask for a payment plan or waive the late fees. That might help if you are proactive. Track every dirham and riyal until you're debt free. Track every expense. You've worked hard here. Don't let interest charges eat up your peace of mind. Credit cards are powerful, but only when used wisely. As expats in the GCC, we must be smart with every financial decision and avoid money mistakes that can haunt you later on. Today, we're talking about a topic that many expats in the GCC are curious about: investing for beginners. If you've been thinking, where do I even begin, or how do I make my money grow while living in the Gulf, then this video is for you. Why should expats invest? Let's start with the big question. Why should you invest in the first place? Well, most of us expats move to the GCC to earn better, save faster, and secure a good future in the limited period of time. But simply saving money in a bank account isn't enough anymore. Inflation slowly eats away the purchasing power of your cash sitting idle in bank account. Your money needs to grow faster than inflation. That's where investing comes in. Let me give you an example. A friend of mine moved to Dubai in 2018. He earned well and saved money, but kept it all in his saving account. Fast forward 5 years, his money barely grew. Meanwhile, another colleague invested regularly in ETFs and grew his wealth by nearly 40%. Without being a stock expert. That's the difference investing makes. What does investing really mean? Let's simplify this. Investing is putting your money to work so it can earn more money over time and beat the inflationary erosion of your wealth. This can be through stocks, for example, buying small ownership in companies, real estate, owning property that gains value or earns rental income, mutual funds or ETFs, diversified bundle of investments, gold, a traditional store of value, especially popular among South Asian investors, or even bonds and sukuks, which give fixed income for the risk-averse investors. Thinking of investing is like planting a tree. You don't see the fruit immediately, but over time, it grows, multiplies, and gives back. What to do before you start? Before jumping into any investment, you need to get your basics right. Step number 1 always is build an emergency fund. Always keep 3 to 6 months of expenses aside in a liquid account. This is your safety net. Step number 2 is get out of high interest debt. There's no point in investing for 8% return if your credit card is draining you at 36%. And step number 3 is know your goals. Are you investing for your child's future education, or buying a house or apartment back home, or planning early retirement? Your goal decides your investment style. Investment options expats have in GCC. Now the good part. Where can you invest as an expat in the Gulf? Living in GCC gives you unique opportunity of access to global market. Here are some beginner-friendly options. Index funds and ETFs, which are available via global platforms like Serva, Baraka, Stashaway, or interactive brokers, which are low cost, diversified, and easy to understand. Great for long-term growth. Number two is US stocks and blue chip companies. You can invest in companies like Apple, Tesla through platforms like eToro, Interactive Brokers, even Serva Trade and Baraka. Real estate in your home country or in GCC, but be mindful of taxes, legalities, and rental yields. GCC real estate can be tricky but offers good rental income opportunities. Platforms like Stake, SmartCrowd, Pripco gives you good option of fractional ownership in UAE and Saudi real estate. You can invest as little as 250 dirhams. Sukuk or Islamic investments. If you prefer Sharia compliant investments, Sukuk or Islamic mutual funds are now easily accessible online. Before we go further, if you're just starting your investing journey and want a clear and simplified guidance, I've got something special for you. I've written a free ebook on investing, a step-by-step guide designed especially for beginners like you living and working in the GCC. In this guide, I break down the basics of investing, how to beat inflation, how to build long-term wealth, and avoid the common mistakes that drain your savings. It's simple and practical, simplifying investing for you. Download it now. The link is in the description below. Common mistakes expats should avoid. I've seen so many expats make the same mistakes again and again. Chasing quick returns. Someone tells you about crypto or gold is hot, you jump in without research. Falling for sales traps. Insurance plans disguised as investments with high fees. Not diversifying, putting all your money in one stock or one asset or one country. Starting too late, waiting for more savings or better timing often means lost years. Remember, time is money in this case. One client in Qatar waited for 3 years just to time the market. In that time, S&P 500 grew over 40%. What is the lesson? Start now, start small, but start smart. How to start small as an expat? If you're thinking, Mubasher, this sounds good, but I don't have thousands to invest. Let me tell you, you don't need thousands. With platforms like Serva, Baraka, you can start with just $100. Automate a small portion from your salary, even 300 dirham or real per month will add up. Regular monthly investment of 300 real or dirham can grow up to 230,000 real in 20 years at 10% annual return. Set up simple 3-fund portfolio: global ETF and stocks, regional ETF or real estate, sukuk or cash equivalent. You can learn the basics, stay consistent, and avoid emotional decisions. That's all it takes to grow wealth over time. So expats, investing is not about timing the market, it's about time in the market. Start small, stay consistent, and keep learning. Let me ask you something. Are you financially prepared if you had an emergency tomorrow, God forbids a car accident, a hospital bill, or even an unexpected job loss? Most expats in the GCC don't think about insurance until it's too late. But trust me, understanding insurance is not just a financial decision, it's a peace of mind decision. Today, we'll break it down what insurance really means, why it matters for expats like us, and what types you should absolutely not ignore while living in the GCC. Why insurance is your financial shock absorber. Imagine driving a car with no seat belt or no brakes. That's what life looks like without insurance cover. Insurance is your safety net. It protects you, your income, your savings, your family, and most importantly, it gives you peace of mind. As an expat, you don't have large family network here. If something goes wrong, there's no backup. That's why insurance becomes non-negotiable for us. The 4 types of insurance every expat should know. Let's keep it practical and simple. Here are the main ones. Health insurance. In most GCC countries like UAE, Saudi Arabia, and Qatar, Health insurance is often provided by the employer, but is it enough? Many plans cover only the basics. If you or your child or family member needs surgery, long term treatment, out of pocket costs can go sky high. Always know what's included and excluded in your plan. If needed, buy an additional top up plan for wider or international coverage so that you are covered during your vacations in the home country or any other international country. Life insurance. Nobody likes talking about death. But if you are the main breadwinner, you must ask yourself, what happens to my family if I'm not there? A good life insurance policy makes sure your kids' education, your spouse's survival, and your family's lifestyle are not destroyed overnight. Real story, a Pakistani expat friend suddenly passed away due to a heart attack. No life insurance. His wife had to return home, sell assets, and start over all while grieving. It was really heartbreaking. Don't leave your loved ones in such a situation. Home and contents life insurance. Whether you are renting or owning a house, accidents do happen. Fire, theft, flood, and especially if you are living in high-rise apartments or compound villas, you never know. It's very affordable and protects your thousands worth of household items like electronics, jewelry, furniture. Check for bundle package to save on premium cost. Travel insurance. As expat, we travel a lot to our home countries or around the world. Flights get cancelled, baggage gets lost, medical emergencies occur. Travel insurance covers you when you least expect it, and many plans cost less than your weekend brunch. Annual multi-trip policies are far more cost effective if you travel more than 3 times a year for work or vacations. Optional but useful insurance types. Some extra ones to consider depending on your lifestyle. Critical illness insurance. It gives you a lump sum if diagnosed with serious diseases like cancer or stroke. Car insurance. It's mandatory in all GCC countries, but get comprehensive one, not just third party. Ask for GCC wide coverage if you drive across borders like Qatar to UAE to Saudi or Bahrain. Not all insurers automatically include this benefit. Income protection. If your job is unstable or risky, this gives monthly income if you can't work. Expats in UAE should check if their employer or bank provides involuntary loss of employment insurance called ILOE, which is mostly mandatory in UAE. How to choose the right insurance as an expat? Here's a quick checklist you should consider. Understand your needs, single or family, job type, lifestyle. Always compare multi-providers. Don't go with the first offer. Use the comparison websites which are available locally. Read the fine print. Know the inclusions, exclusions, and waiting periods. Avoid policies tied to investments unless you fully understand them. Many salespeople push expensive life insurance come investment policies that don't deliver returns. Common mistakes expats make with insurance. Let me share some common slip-up. Relying only on employer insurance without checking the details. Not updating policies when your life situation changes. For example, you get married or have a baby. Choosing the cheapest option, not the most suitable. Not keeping copies of policies and emergency contacts easily accessible. Final thoughts: insurance is not a luxury, it's a lifeline. I get it, insurance feels like money going out with no return. But when something goes wrong, and it potentially may at some point in time, you will be thankful that you made that choice. For expats in the GCC, far from home, insurance is a tool that gives you security, confidence, and control over future uncertainties with peace of mind. Today, we are talking about something many expats don't think about until it's too late. Retirement planning. You're earning well in the GCC, life is comfortable, but what happens when your contract ends? When you return home or retire without a pension? This episode will help you take control of your future step by step. Why expats must plan for retirement? Let me ask you a simple question. If your job ended today, would you be financially okay for the next 20-25 years? Most expats in the GCC don't have access to government pensions or social security benefits. We live in a tax-free environment, yes, but we also don't get lifelong benefits. Once we leave our job, our income stops. And if we haven't planned properly, it can lead to serious stress and regret, leading to health issues. I've seen people in their 50s and 60s with very good careers behind them, but no real assets generating the consistent stream of income they can rely on. They worked hard for decades, but didn't save or invested smartly. Don't let that happen to you. Set your retirement goal. Start by asking yourself, when do I want to retire? Where do I want to retire? And how much money I need monthly after retirement. Let's say you want to retire at age of 60 and live a comfortable life with monthly expenses of 2,500 riyal or dirham. That means you need around 30,000 riyal or dirham per year for 25 years. That's 750 in total, not counting the inflation. It's also called FIRE amount in the context of financial independence, retire early, FIRE movement. It refers to total savings and investments needed to cover your expenses indefinitely without relying on traditional employment income. So 750,000 riyal or dirham sounds like a lot, and it is, but it's possible if you start early and stay consistent. Build your retirement fund. Here's how you can build your retirement nest. Number one is emergency fund. First of all, always start with 3 to 6 month emergency fund to cover essential expenses. Retirement planning won't work if you are constantly dipping into your savings. Number two, start saving monthly. If you start with 1,000 dirham or riyal a month, that's 12,000 a year. Over 20 years with 8% return, that can grow to nearly 500,000. Number three, invest smartly. Use long-term investment stocks, ETFs, mutual funds. Avoid get-rich-quick schemes. I personally prefer global index funds or ETFs or Sharia-compliant ETFs if you are risk-conscious. Use compound growth. The earlier you start, the better. Every year of delay can cost you hundreds of thousands in future value because we all know time is money. Where to invest as GCC expat? Many ask me, Mubasher, where should I invest? Here are some of the safe long-term options for retirement. Number one, global stock markets, US index funds or ETFs, which are available via platforms like Serva, Baraka, eToro, or Interactive Brokers. Mutual funds available via your home country or in GCC. Property investment in your home country or GCC. Considering the consistent growth of UAE real estate, one should explore the fractional ownership of property investment by platforms like Stake, Smart Crowd, and Pripco. You can invest with as little as 250 dirham to earn monthly rental income and potential capital gains. GCC-based plans like DFM ETFs or UAE pension plans. Avoid products that lock you in for 25 years with high fees. Always read the fine print. If you are in Qatar, Saudi or UAE, check what's available locally, but always choose what's transparent and flexible. Retirement mistakes to avoid. Let me quickly share some mistakes I've seen most expats make. No plan at all, hoping to start later. Over dependence on gratuity or end of service benefits. Putting all your money into real estate. Not investing at all or investing in risky guaranteed return schemes. not involving your spouse in personal finance planning. Remember, retirement is not just about money, it's about peace of mind. So, involve your family, make a joint plan. Closing thoughts: retirement might seem far, but time flies like anything. You're already working hard. Now, let your money work for you. Start with small steps. Set a goal, choose your investment platform, stay consistent, and you'll retire with dignity, not dependency. And if you found this video helpful, do like, share, and subscribe. And I warmly invite you to join our WhatsApp and Facebook communities where expats like you are learning and growing together. Links are in the description below. Together, let's build financial confidence, one smart decision at a time. Thank you for watching Know and Grow with Mubasher Jillani. I'll see you in the next episode.